Welcome to Trading Nation. I'm Seema Modi, joined by Kathy Lean of BK Asset Management and Ari Wald of Oppenheimer. And Ari, you say there's a clear sign that stocks have not topped out. Explain.
That's right. There's a variety of reasons we're bullish on equities, broad-based internal breadth, good leadership, improving credit. And we would also note that we're not seeing the type of euphoria that you typically see at a major top in the market. And we've seen this even recently. The S&P 500, since its August peak, down about 3.4% peak to trough. Run-of-the-mill pullback, but as soon as the volatility hits, and as soon as you get that first whiff of downside volatility, you really see the bulls run for the exits. And this got picked up in the Investors Intelligence Bull-Bear ratio. That's one of our favorite sentiment surveys. In August, it was at 2.8. Last week's reading, it fell to 1.8, actually moves below 2, tend to be significant. And what we found is that when the sentiment survey when pessimism in that survey tends to rise, tends to be correlated to rising forward gains in the S&P 500. So again, at the very least, I think it argues against the extreme euphoria in the marketplace that you would usually see at a market top. And it's actually one more reason we're bullish on equities.
It's an interesting indicator to keep an eye on. Kathy, what do you make of Ari's case?
I have to take the other side of this. I think, while it is interesting that historically, when you see these type of patterns in the indicator, that it suggests that stocks, are not topping out. But I think we're facing a very uncertain event risk, and a major one at that. I mean, unless suddenly Trump completely sabotages himself and you see the polls completely shift and jump 10-20% in Clinton's favor, which I do not think is the case. I think we're walking into a very high volatility election cycle, unlike one we've been in for quite some time. So I think that's going to make domestic and global investors nervous, and they're going to be wary of holding stocks at these elevated levels. So I do fear that we could see a deeper correction in stocks, especially since Brexit seems to be back in the headlines, and all of that could lead to not an end of the year Christmas rally, but rather end of year Christmas collapse in the markets.
Ari, your response?
I guess valid points there. There is indeed some uncertainty, and I think there has been that uncertainty has been around for the good part of the year. And I think what it's led to is that, talking to a lot of institutional PMs, I think a lot of them have been underinvested. I think they've already been out of this market, and who's left to sell, I guess, when everybody's already sold. And in fact, what we see the setup being is that they'll have to chase this rally as it continues to move against them, as it already has done over the past few months.
We will see it, but of course a lot of focus on the debate as well. My thanks to Kathy and Ari, and thank you for joining us on Trading Nation. I'm Seema Modi. Good luck out there.